Hi, in this video we will do some practice of double entry bookkeeping, and that will be the activity. Let's start with the activity. The owner starts business with $10,000 in cash. We have to look the effects and the actions. Now we can see here that our cash in business increases, so it will be debited. On the other side, our capital also increases, so the capital will be credited. The final entry would be cash debit by 10,000 and capital credit by 10,000. Let's see the another one. A van is bought for $4,500 on cash. We'll see the effects and actions here. What gone, what came in. Increase in asset, which is a van, so we'll debit the van account. The other effect is decrease in cash, which is an asset account. So when asset is decreased, it will be credited. So our final entry will be van account debit by 4,500 and cash account credit by 4,500. The next one. Fixtures bought on credit from XYZ for $1,200. Now we can see here the liability is increased. So let's see the effects and the actions. The first one is that increase in assets as fixtures came in. So debit the fixture account, and on the other side the liability increases, so we will credit the XYZ account, and the final entry would be fixtures account debit by $1,200 and XYZ account credit by 1,200. Now in another example, we can see that the company paid to XYZ. How we will see the effects and the actions. The amount paid owing to XYZ in cash. The first effect is decrease in liability XYZ. When the liability decreases, it is debited. So XYZ account will be debited, and decrease in asset, which is cash, as cash gone out. So the action will be credit cash account, and final entry would be XYZ account debit by 1,200 and cash account credit by 1,200. The next example is started business putting $25,000 into business bank account. Now here the bank account is increasing, so let's see the effects and the actions. We can see the increase in asset, which is a bank, so it will be debited, debit bank account, and increase in capital, so the credit capital account, and the final entry would be bank account debit by 25,000 and the capital account credit by 25,000. In the next example, sold goods on cash for $3,000. Here we can see the effects and the actions. When we sell the goods on cash, the company receives the cash, which is in assets, so assets increasing asset is always debit. The second effect is increase in revenue. The sales is a revenue, so the sale is increased, so it will be credited. So our final entry will be cash account debit 3000 and sales account debit 3000. Let's see the next one. The next one is purchased goods on credit from ABC for $5,000. The effects and actions: increase in goods. So debit the goods account or the purchase account. The second effect is increase in liability. So ABC is a liability, so we credit the ABC account, and the final entry would be purchase all goods account debit by 5,000 and ABC account credit by 5,000. The next one, sold goods on credit to BBB for $7,000. When we sell the goods on credit, the it will be called a debtor. So BBB is a debtor, which is an asset account. Let's see the effects and the actions. Increase in asset, debtor, which is BBB. So we debit the BBB account, and increase in revenue, sales. So the sale will be credited, and the final entry would be BBB account debit 7,000 and sales account credit by 7,000. The next one, paid salaries to staff for $9,000 in cash. As we know, the salary is an expense account, so let's see the effect and the actions. Increase in expenses, which is salaries, so the action will be debit salary expense account, and credit will be cash because there is a decrease in cash. So the final entry would be salaries expenses debit by 9,000 and cash credit by 9,000. The final entry, withdrew $1,500 cash from the bank and placed it in the cash box. Now, of course, the cash box means in the office cash box. So let's see the effects and the actions. Increase in asset, cash, because the cash came from the bank. So the cash account is debited. And again, decrease in asset, which is bank, because the money came from bank, the bank balances decreases, so the bank will be credited, and the final entry would be cash account debit by 1,500 and bank account credit by 1,500. Thank you, and see you in the next video.